Let's talk about bridge loan financing. When buying a home, meaning we're not talking about loans to build a bridge. We're talking about, that's a bad joke, but let's talk about loans to help somebody who owns a current home and they want to go buy a new home, but all their money's tied up from an equity standpoint for a down payment on the new home. It's all tied up in their existing one. That's where bridge loans come into play. Now, truthfully, most folks are incorrect when they use the term, hey, I want a bridge loan. They don't necessarily mean that. What they really mean is, I got a problem. I need money out of my current home so I can go buy a new one. So bridge loans are typically short-term loans. They're typically there to solve a problem, which is, hey, get money out of the current home because I'm ultimately going to sell it and it's going to be gone in the next, however long it takes you to find the new home and then sell it. So they're typically short-term loans. Now, if somebody says, hey, I want to keep my current home and I want to keep it as a rental property, or I want to do something else, or I just need to cash out, that's not a bridge loan. Now, you might be able to go take cash out of your home to use for the purchase of the new one. It bridges the gap, so to speak. But if you did that and you're going to rent out that home, you have to do it as an investment property. Because when you sign the paperwork for lenders at closing, you're saying, hey, I promise I'm going to live there for at least 12 months. So if your intent is to move out, don't commit fraud. That's a big, big deal. So if somebody says, hey, I'm going to keep it, do not do a bridge loan. Like, do not keep the house. If you're going to keep the house for a long term, do not do a bridge loan. Bridge loans are short term, and they're there to tap into the equity and or help somebody buy two homes and not qualify for both. They can qualify for just the new one from an income standpoint. So that's what a true bridge loan does. So if you're going to keep the house, don't do a bridge loan. Call us and let's talk about a home equity or a cash out loan. We'll put a link somewhere around that. So call us for that. So now, if you are going to sell the home as a homeowner and you're going to get rid of it and buy the new one, what that means is I would like to challenge you to say, do we really even want to do that? First and foremost, I would always challenge folks and say, man, just sell the home first. And that may mean becoming a renter for a minute until you find the new home. I personally did that so I can put my money where my mouth is. And I'll tell you, it is a lot more work. It's a lot more just moving parts in life, but the stress levels are way lower because now I know when I sell my home, I know exactly how much money I'm going to have for the new home. I can also clear up any other outstanding debts I had in life. You take your equity, you got it in the bank, and now you are a renter, and it stinks. I don't love being a renter, but the reality is it just made things easier, and then you can do exactly what you want on the new home without feeling a lot of stress, financial stress. So if you're open to that, I would say let's talk about that and explore. But now if you're saying, man, forget you, I want a bridge loan, cool. If somebody can qualify for both homes from an income standpoint, if you can qualify for both the current mortgage and new mortgage from an income standpoint, we can get that done. I would then say, let's see if we can just buy the new home, not get a bridge loan, just buy the new home. And that might mean doing less of a down payment. Maybe it's just 5% down instead of the 20 or 30% or whatever they want to put because the equity is still in the old home. And the reason being, if you put down that lower amount and just get in the home, once you do sell, you can take all that money and dump it into the new home and reduce your mortgage. And you might say, well, I wanted the lower payment. Well, cool. Guess what? You can do a recast. I will put a link down here for a recast. With conventional financing, you can do a recast, which means they can lower the payment. It's not a refinance. You'll get to keep your rate. You get to keep all that. But look into doing a recast so that your payments now are lower now that you've dumped all that money into the new home. So that would be my plan A, to say, like, if you can make that happen, that's my typically that's my recommendation. Obviously, we can talk, call us if you want to talk about your specific piece, but generally speaking, that is kind of what I call plan A. Plan B says, okay, we can qualify for both homes, but we don't have the money or access to the money to use for the down payment, even if it's just a 5% number. Well, in that case, let's go back to the current home and maybe put a second mortgage on it, like a line of credit or a HELOC, HELOC, home equity line of credit. We'll put a link for that as well, so you can learn more about those. But the line of credit, the reason why we do that as opposed to refinancing the whole thing and getting cash out is the HELOC's cheaper, easier, quicker. You don't pay interest on it until you use it. So you can get a HELOC today and we don't have to use it. If you don't use it for 8 months because you've been house shopping, there's no interest to pay on it. So HELOCs are great. So that's plan B, is if we need it. And that's what a lot of times people mean by a bridge loan. They just really mean that second mortgage line of credit. That's technically not the right term, but I know what they mean when they ask for it. I do not want to refinance the primary mortgage into doing a cash out because, as I mentioned before, if you're going to sell it, it's just a lot more fees. And then also, lenders expect you to hold that mortgage for a long time. So they don't want to do loans, traditional mortgage lenders like us. They don't want you to do a loan and then sell it, or sell the house in 4, 5, 8, 12 months. They want you to have it for at least like 6 to 12 months. Truthfully, they want you to have it for years. But at least the 12-month mark is kind of where they want to say to keep them out of trouble. So that's why we don't want to do the full refinance if we can help it on the first. Now, let's pretend somebody cannot qualify from an income standpoint with both homes. Now enters the real bridge loan. So a real bridge loan, it's very hard to find in today's market. It was always hard to find. And then especially in today's market, it's hard. And it's typically done by banks. And so what they're going to do is say, okay, let's look at both homes, new home you've identified and current home. And they're going to say, we'll do one loan on both. And so they're going to charge you half a point to a point to get it done. And then they're going to have what's called a combined loan to value of 70% or less in most cases. So what does that mean? Let's take some examples. Let's say two homes, we're going to keep it easy math. Both homes are 500 grand. The current one's 500 grand, and they want to buy a new $500,000 home. So it's $1 million total in value, right? Current home, new home. And we'll say current home only has a 100 grand mortgage on it. So they have $400,000 of equity in there. That's great, good for them. They want to buy a new home for 500. A true bridge loan will allow them to move in with no down payment. Why? Well, again, 70% combined loan to value. In this case, we got a 500 plus 500 equals $1 million. So in that million, 70% means they can get a loan up to 700 grand. Well, if they want 500 for the new purchase, that's 100% financing on that property. They only owe 1 on the other property. That's 600,000. That's less than the 700,000 limit. So they can buy the new home at 100% financing. And some banks will even say, we won't even count the mortgage payment on the first home. So that way you don't have to worry about carrying 2 mortgage payments because they know that that one will be sold. Those are typically 12 months or less. Rates are going to be 2.5%, maybe 3% above prime. So Google prime rate to see what it currently is. But Google prime interest rate, and it'll tell you about 3% higher. So it is expensive. So all that's to say, a true bridge loan is one loan that covers the whole, both of them. Because that 100 grand mortgage in this example would actually get replaced by the new mortgage. They'd give you, bank would give you 600 grand mortgage, 5 for the new, 1 for the old. And so then you have 2 properties worth $1 million. So that's a true bridge loan. Very, very, very few people do it. More often than not, I see them basically saying, hey, you know what? I'm just going to sell. That's why I do recommend that, because that's what I see most of the time. Or I see, hey, I qualify for both. I'll just use current money that I have and put down the down payment. Or, number 3, plan A, plan B, plan C, or third one in this example. They qualify for both, don't have cash, and they go get a second mortgage on their current home. Third, or I guess now fourth option is that for whatever reason they can't qualify for the HELOC, and they can't find cash, whether it's a gift or otherwise. Now they got to go to do a true bridge loan. So that is the order of operation that we typically see and recommend. Certainly, if you have questions, let us know. And just, it's worth mentioning, there are companies out there. There's about 3 that I know of. I won't say their names. I don't want to give them, too much accolades. I don't like them. I've heard nothing but bad things. But there are companies that will buy your house from you, let you live there, and then they can do all this other stuff. And whether that's buy your current house at a steep discount, or they buy the new one, you then rent it and then close on or you refinance later on, or you buy it later after you sold your current one. I don't like them. I haven't heard anything good about them. They're super expensive, and I just would not recommend them. Cannot and will not recommend them. So that hopefully gives you a rundown. I know it's a long-winded video, but it's certainly a big topic. If you have questions, as always reach out and let us know what we can do for you. But certainly work with somebody like, and trust. We'll point you in the right direction if you come to us. And as always, when you think mortgage, think Martin.